Hello everyone and welcome to the Fund Insight series of UTI Mutual Fund. Today we have with us Fund Manager Mr. V. Srivatsa, who has an experience of over 2 decades in equity research and fund management. Srivatsa, could you give us an overview of UTI Large and Mid Cap Fund and its core investment philosophy?
Hello everybody and thanks Sonal for this opportunity. UTI Large and Mid Cap Fund is positioned in both large and mid cap stocks with at least 35% allocation to each of the large and mid cap stocks. We follow a distinct value philosophy for this fund where our major emphasis is on margin of safety. The core belief is that a company goes through its own valuation cycle, which may vary either on account of macro-related concerns or company-specific concerns. And we aim to capture the inefficiencies in the valuations that the company may see in the cycle. We also look out for growth-oriented companies if the valuations are in the comfort zone. In all instances, the emphasis is on the potential for mean reversion in fundamentals and valuations. Further, the fund makes conscious efforts to reduce the volatility in the portfolio returns through portfolio diversification and avoids sector as well as stock concentrations.
Since the fund is investing both in large and mid cap fund, how do you strike a balance between large and mid caps, and what are the factors that typically influence this allocation?
Yeah, our asset allocation is largely having large caps in the band of 45 to 50 and mid cap in the band of 35 to 40 and the rest in small caps, which ranges from 10 to 15%. Our endeavor is to have a higher share of large caps in the band of 45 to 50 on account of large caps being more stable, while the allocation between mid and small cap is decided on valuations. At the current juncture, we believe that small caps are more attractive valuation than the large caps. Hence, the allocation of small cap is slightly higher than 10%.
Since the mid caps and small caps tend to be volatile and valuations are currently stressed, what's your approach to balancing risk and return in this space?
Our holdings in mid and small cap stocks are well diversified and has a long tail, and we do not take active exposures of more than 2% in any stock, and specifically in case of small caps, the absolute weights are capped at around 1%. And we constantly review our holdings to ensure that this is within the band. Our focus on reasonably valued companies in the mid and small cap space, coupled with quality, helps us to minimize the drawdowns of the fund.
The fund has been consistently delivering top quartile performance. What have been the key driving factors behind the success?
Yeah, on unwavering focus on identifying relatively undervalued companies and discipline on being invested in the same, notwithstanding the volatility, has helped us in outperforming in the last 5 years. Apart from this, our focus on growth-oriented mid and small cap companies and companies which are mispriced has also helped us. We are also disciplined on the valuations and do not hesitate to exit our holdings where we believe that the valuations have played out.
Thank you, Srivatsa. Thank you for watching.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.